everyone is watching tech stocks. The headlines, the hype, the daily conversations, it all revolves around AI, big tech giants, and the next trillion-dollar company. But while the spotlight is fixed on Silicon Valley, something far more interesting is happening behind the scenes. Billion-dollar funds, the so-called smart money, are quietly positioning themselves elsewhere. And what they're buying right now might surprise you, because historically, the biggest opportunities don't come from following the crowd. They come from understanding where capital flows before everyone else notices. And today, that flow is starting to shift. Let's start with a simple truth. When everyone agrees on one trade, the upside is usually limited. Tech has been the dominant story for years now. Massive returns, rapid innovation, and global influence have made it the obvious place to invest. But institutions don't just chase what's obvious, they look for what's next. And right now, many of them are quietly diversifying away from crowded tech positions. One of the biggest areas seeing renewed interest is energy. But not in the way you might think. Yes, renewable energy still gets attention, but large funds are also increasing exposure to traditional oil and gas. Why? Because despite the global push toward green energy, the world still runs on fossil fuels, and likely will for longer than most people expect. Supply constraints, geopolitical tensions, and underinvestment over the past decade have created a situation where energy companies are generating massive cash flows. To big investors, that's hard to ignore. At the same time, commodities more broadly are coming back into focus. Think metals, agriculture, and raw materials. These are the backbone of the global economy, and they tend to perform well in inflationary environments. Billion-dollar funds understand that inflation isn't just a short-term issue. It can persist in cycles. So they're positioning themselves in assets that historically hold value when currencies weaken. This includes everything from copper and lithium to food supply chains. Another area quietly attracting institutional capital is infrastructure. Not flashy, not exciting, but incredibly important. Roads, bridges, data centers, power grids, these are the systems that keep economies running, and many of them need massive upgrades. Governments around the world are spending heavily on infrastructure, and private capital is flowing in to take advantage of long-term, stable returns. For large funds, this is a way to generate consistent income while reducing volatility. Now here's where things get even more interesting. Healthcare. While tech grabs headlines, healthcare continues to evolve in the background. Aging populations, biotech innovation, and increasing demand for medical services are creating powerful tailwinds. Hedge funds and institutional investors are particularly interested in biotech and pharmaceuticals, areas where breakthroughs can lead to exponential returns. It's a higher risk space, but one that smart money is carefully navigating. Real estate is another sector where the narrative doesn't match the reality. You might hear that real estate is struggling, and in some areas that's true. But big funds aren't walking away. They're being selective. Instead of traditional office spaces, they're targeting logistics hubs, warehouses, and data centers. Properties tied to e-commerce and digital infrastructure. In other words, they're not abandoning real estate, they're reshaping how they invest in it.